Hey, and welcome to the Crypto Club and Digital Assets Weekly Catch-up on Zoom. It is 16th of November 2025, and we never know quite what we're going to be talking about. Some weeks we discuss Bitcoin, blockchain, DeFi, NFTs, ICOs, STOs, lots of other acronyms and so on. We get to explore the metaverse, central bank digital currencies, stablecoins, intersection of AI, and so much more. So hopefully there's something of interest in this for you. Do click on the link below to see how you can come and join future sessions. We hold these events every Sunday evening, 7 p.m. till 8 p.m. UK time. Everyone's welcome, novice and expert alike. So with that, let's see who's going to come and join us today.
Good afternoon, Gary. How are you doing?
Hey, I'm good. Thanks, Stuart. Good to see you back again.
Yes.
We're joined by, is it Farid as well?
Yes. Hello. Hi. Yeah, I've just joined.
Hey, well, welcome aboard. Where are you calling in from today?
I'm in London.
Okay. Cool. It's just that we get a variety of people from all over the place, so it's always interesting to know. And we're joined by Richard as well. Hello, Richard. You're in the UK as well, I would guess, Richard. Is that right? And you're on mute at the moment. Is Richard going to come off mute and say hi?
There we go. Yes, sorry. I thought I'd show my face and show that I'm not a Nigerian scam merchant.
Excellent. For those who don't understand the connection, it's just Richard and I and a few others were chatting about making payments between UK companies and companies in Africa. And we were discussing whether it's better to actually try and use crypto in some way, which my thinking is UK banks probably prefer fiat than they do crypto.
Yeah.
So we'll maybe explore that a little bit further shortly. We're joined by Anthony as well. Hello, Anthony. Welcome back.
Good to see you, Gary. Been a while. Stuart?
Yeah,
I think I saw you there somewhere.
Yep. Yeah. Great to hear things are moving at pace for you and TPXs and everything as well.
Yeah, finally. Took long enough.
This is good. So it's great. We've got a nice mixture of people, some old, some new, that kind of thing. These sessions totally open to whatever we want to discuss, really. So I don't have like a fixed agenda or anything like that. So if you're new and you've got questions, great, fantastic. If you're one of the market stalwarts, like as we have with Anthony and with Stuart, they are usually very good at pitching in with things and opinions and experiences and that kind of thing as well.
Usually Gary has to tell us to shut up after a while. Yeah.
So my role is to facilitate and encourage in that. So I don't know, for the new joiners really, particularly Farid and Richard, if you want to open up, if you've got any questions initially, fire away, and we'll see how we can help you. If you haven't, that's okay. Or if you just want to share things, that's fine as well.
Farid, would you like to go first?
Go on, Farid.
Sorry. Yes. Well, I was actually introduced to this through a friend of mine who is, she's in Cambridge, and her name's Dr. Mojgan Modaresi. And I think she has been liaising with, I don't have the names, but I spoke to them earlier. I was really more into equities before, US equities, and I've been increasingly more sort of inclined to crypto, but I have been sort of an amateur trader in crypto for maybe 6-7 years. And now I'm finding stable coins quite interesting in terms of emerging market sort of trade.
Excellent. That's good. And it's fascinating as well. There's definitely an outbreak of crypto enthusiasm, particularly in Cambridge at the moment, which I think is fueled by a few people up there who are really driving things. So it's really good to see. So thanks for sharing, Farid. And it's interesting as well, your background is not dissimilar to many others who've come from like traditional finance in some way. And I've discovered this new thing called crypto over the past few years, and we're all still learning about it. So is there anything in particular, Farid, you're looking to get out of the session? You just came along and thought...
I was just interested really in terms of trends, and particularly seeing what's happening to XRP and comparing that to Bitcoin, which is like I believe it's the largest it has the largest market share. So just really interested in trends.
Well, we can open that up to everybody. I will just throw a couple of things in straight away for people, whether they've been before or not. We do record these sessions, first of all, and we do publish these on YouTube afterwards. So if anyone wants anything to not be included on the recording, please tell me up front. So let me know in advance, because it's nothing worse than me posting this to YouTube and then people a few weeks later saying, "Oh, can you just edit all the bits in that out that I was in?" Because it's not very easy to do that. But yeah, Farry, it'd be interesting. The other thing as well, for everybody, none of what we talk about is financial advice, legal advice, or any other form of professional advice anyway. It is just opinions and that. So I'll throw in straight away my kind of perspective about trends, that kind of thing, because it's interesting that at the moment the crypto market, I can't even remember what the market cap is. It's probably about $3.7 trillion or something at the moment, give or take, and it weaves up and down. Bitcoin at the moment, I think in the last couple of days has dropped about 10%, which actually in the crypto world that seems to be just pretty normal compared to some things. So I'm not seeing anything particularly specifically about trends with particular coins because I don't really track them in that way. What I do tend to notice is trends in themes, shall we say. So I've been interested in the space since about 2014, 2015, and I've seen emerging themes come and go. So several of the people on the call today probably familiar with the ICO craze around about 2016, 2017. Anthony's smiling there straight away.
That was where Gary, that's where we first met.
Yeah,
At the back of the hall of one of the ICO guys who were telling everyone how to scam the market. So that was quite scary.
Exactly. So yeah, so that was a trend where a lot of companies were looking at doing fundraising with crypto in 2016, 17. Then there was certainly the growth of smart contracts and programmable crypto tokens, which grew for a while. Then there were, what came next? Was it NFTs that came next? That they were a trend for a while, and then the whole tokenization of real world assets, the favorite words that Anthony likes when he hears tokens and real world assets all together. And then we've had DeFi, where people are saying, well, let's move into the 21st century and so on. So what I see is just general waves of themes. I don't know if anyone's got any other thoughts that they want to add on that. Stuart, to see you smiling, am I touching some familiar things there?
I wrote an article and published it in LinkedIn a couple of weeks ago, basically saying blockchain will not save the world. And the point being is that blockchains need to just disappear into the woodwork as a utility. And we don't need all the bells, whistles, flags, and everything on it. It just needs to be a utility, and I need to be able to get onto that utility as though it was Web 2. So as my mother could do it, or a man in the street could do it. And I've had a lot of pushback on that. Oh, no, you've got to have this, you've got to have that. And it's like, no, blockchain's a utility. And when you get used to it as that and take it as that, it's okay. But trying to make it anything else, no.
Here's a fun marker, Stuart, for you. We just put stuff out on a press release, a new service. We hadn't used it before, and led down the garden path a little bit on it. But fundamentally, what we found out after we put our press release out last week is that a lot of the press agencies would not publish anything that had blockchain in it.
Right.
And that was complete news to me, because I thought we kind of got over that speed bump a number of years ago. Nope, still out there. So you're absolutely right. When it becomes ubiquitous as email, so to speak,
yeah.
we're in a good place.
Yeah, exactly.
And I'd throw in as well, I've long argued, having been an advocate in the blockchain space, that we really should stop talking about blockchains, because it's a foundational technology. It's an enabler. Cryptocurrencies is a part of that, but it's what the other capabilities are that are much, much wider. And that was the other trend I probably forgot to mention as well, Farid, is that initially you had blockchains, which are all the rage, and distributed ledger technology and that. And it's kind of funny. I wrote an article a number of years ago. I do a lot of stuff in the commercial insurance sector. So what people may have heard of as Lloyd's of London. And I did a lot of stuff of helping them educate themselves about the potential of this technology. And I wrote an article about how are blocked drains going to change the insurance industry, I think it was. And that's because I was literally in a lift in the Lloyd's of London building. If anyone's ever been there, an amazing building where the lifts are actually on the outside. And a fellow technology architect happened to be in the lift with me. He said, "Hey, Gary, what's this I'm hearing about block drains and how that's going to change the insurance sector?" And it was actually blockchain, and he just misheard it. And it's so yeah. So there's all these kind of trends. I don't know, Richard. What's your kind of background and interest? Is this something that's relevant?
I'm 100% out of all crypto at the moment, but yeah, I sort of dabbled in it. I fell victim to the Safe Moon rug pull, as I think many did, and hoping that Karen E languishes in jail for quite a long time. But at the moment, it looks to me like with HMRC coming in and actually sort of taxing things properly from early next year, and with more sort of tethered crypto, that actually it's going to be potentially more mainstream. And hence that was my question about transacting between Africa and Europe, as it seems that that's business that banks don't want at the moment, certainly when it's sort of 10 million, under 10 million pound turnover companies. It's a bit of a nightmare trying to
Actually, that's another trend I saw come through as well at one point, which was using crypto as a payment service, rail or channel. There's a lot of that around remittance services. So a lot of people who are from India, in particular, and some of the Middle East, where they'd be working in like the Middle East, or they'd be working in America, and how they could efficiently and cheaply repatriate their money back home without paying ridiculous fees and that kind of thing.
Yeah,
Well,
that was another growth area for a while.
That's quite topical then. So we're involved in a contract. I'm not sure if it's going to happen, but it's for a big construction group in UAE that's doing their transport systems, their tube trains, their trains. And they have a lot of Bangladeshi workers. They pay them in cash, and they're about to move them all to USDT.
Wow.
And what they're looking to do, the wage bill, it starts off at $1 million a day. They're asking us to do this, and they're looking to do this across all the construction group worldwide. They're a very big construction conglomerate, and they're looking now to extend that. In the numbers, it could end up within the next 8 months at about 30 million a day that we're moving for them in USDT. And they're paying all their workers through distributed wallets, self-custody wallets, because the workers don't want to take their money back in the fiat currency of their nation state when they go back home, or remit it back home, because they don't want to be taxed on it. So inevitably, they're finding ways, as always happens, that this happens. Now, I wrote an article. I'm not sorry, that wasn't a preliminary to talk about the article, but it's a very interesting one. We put an article out a while back now called "The Uber Moment of Global Banking," and it effectively says governments always forget. History has always dictated that ultimately, when people wish to do so, when the fiat currencies don't hold the value of their labor that they want them to hold, is that they choose another currency. And it frequently has nothing to do with the currency that the nation state wants you to use. In Venezuela, Zimbabwe, Lebanon, they don't use the nation state's currencies to transact. They use typically the US dollar. And when trust is lost, like in Zimbabwe, it doesn't matter what the nation state issues, even gold-backed money, nobody uses anything the state issues because no one trusts them. So trying to stop these asset systems, these stable coins, these provided there's a trusted value in there somewhere that people can recognize, on-ramps, off-ramps, transparency, trust, governance, no double bookkeeping. et cetera, et cetera. Then all of a sudden, the ability of governments to ultimately stop people being paid in what they want is a bit akin to trying to stop the letter A being used in the alphabet. That's where it's going. Now we're working on agentic AI wallets right now that allow us to hold basically 10,000 different assets on a self-custody wallet. And the wallet chooses what you pay with at a time and space based upon your citizenship, based upon where the asset resides, based upon whatever tax profile you have, and does a handshake with the merchant or the payment settlement system of wherever they may be. And the merchant then decides what they want. Could be the merchant doesn't want to be paid in fiat currency at that moment. It may want to be paid in commoditized oil futures. Maybe they're an oil and gas company and they prefer to pay that because they worked out, what the true value is downstream for when they need it, and so on and so forth. So the economy we're moving into is an asset to asset to asset based economy where fiat currency is just a number you counted in. That's what we think is happening.
And that probably links in again for you're asking about like trends or whatever. I know you're asking it more from a perspective of crypto price trends probably, or crypto market trends. But another big trend is the adoption of stablecoins, which seems to be the thing at the moment that everyone seems to be talking about. So that's another area. Sorry, I noticed, Ray, you joined us before. Were you on the call the other week? Was it? Or have you not been on one of these before? Sorry.
I was on last week.
I thought so. I thought familiar face. That's good. Just wanted to welcome you back.
Thank you.
That's good. So, Fareed, the other thing as well, you're asking specifically about things like XRP. So, Ripple and that. I've not followed XRP probably since the big court decision a long time ago now, it feels, in the US about whether what Ripple was doing was a security or not, and the case got cleared on that. So I think the problem I found with Ripple or with XRP is that people always mix up XRP with the Ripple payment system, and it's not the same. So Ripple Labs have got a capability, if I remember correctly, where they have like payment capabilities for banks and they're doing lots of stuff. That's not necessarily using XRP for the payment rails. And so my only observation about Ripple and that is be wary of people who mix the two up, because they seem to think that because Ripple are engaging a lot with banks, whether it's central banks or local banks, and providing payment capabilities, which again are very much in the stablecoin remit, that people keep saying, oh, that means XRP is going to do well, isn't it? It's like, no, they're actually two separate things.
Yeah,
Did that help in some way?
Yes, definitely. First of all, what Anthony just said about USDT, which is a stable coin from what I understand, that's quite interesting in terms of paying Bangladeshi workers who would normally remit cash to their home countries. So I'm just interested in what that would do to the existing sort of cash remittances that they send back, and how how Bangladesh would also deal with this new stable coin system, and that the impact it would have for their own sort of financial system, because the Pakistan, which is next door, is under this new Trump administration, it seems to be really advancing crypto. And there's a lot of interest. Even prior to the Trump administration, there was a lot of investment in crypto because of the Pakistan rupee. It wasn't really going in the right direction. But that's what I find quite interesting, how stable coins are going to disrupt the emerging markets.
Well, here we have some fun with this one, because I gave a mention house speech again. Sorry, done it again last week on this. Here's a couple of interesting markers. First off, it's very useful to start off when you're looking at stable coins to remember stable coins are only truly stable in the mind's eye of the person who's selling them to you, because they're always based on fiat currency, and fiat currency is always based upon the currency of the nation state, and the nation state is always prone to the inflation that the state causes by its borrowing. So they're not quite as stable as they'd like you to think, but they have a great facilitation. The other aspect to them, i.e., they're very good to use in commerce. Now, some numbers that I picked up last week These are quite astounding numbers. The amount of stablecoin transactions in the last 12 months in aggregate, because they roll over and change hands many times, I saw a stat for this for $47 trillion globally. But they reckon that when they actually did the analysis, that was a lot of the bots as they do, moving it around, and it was actually 9 trillion. But still, the numbers are eye-watering. And we're seeing also in USDT, the conversion rate where they have USDT and they actually convert it back into USD dollars is only about 4%. So once it gets converted into USDT, it just continues to move. It almost moves continuously because of the value of it. Now, we're in the property business. We have a line of business that we have a digital escrow business inside of the group. The number of people now coming to us that want to sell their London properties for USDT, but don't want to accept fiat currency for it, or to accept US dollars for it, or even to accept any cryptos for it. They just want USDT is quite phenomenal. And some significant amount of potential money for us, potential fee volume for us, the way we operate that business.
And you know what's happening with London real estate right now?
Well, it depends who you look at and who whether you're talking to the tax people who want to tax everything that moves. There's a lot of negative sentiment, but if you can convert economically efficiently your real estate into a form of money itself, which is what we're proposing to do, using a stable coin, or more to the point, a stable asset coin is the way we're looking at it. Then all of a sudden your house is more valuable than Rachel Reeves would have it be. So there's lots of interesting things happening still in this sector, but that's where we're effectively taking real estate on a global scale into a new form of digital money. Your house is your money, and there's no one in between, and you never convert it into fiat currency. You just move it around in like for like value.
Yeah. Okay.
I'm kind of curious, because people sometimes say things and assume everyone else is of an opinion similar to themselves. Where do you think the London property market is right now?
Oh, I think it's quite toxic, I'm sorry to say. It was a wonderful place maybe 20 years ago.
Yeah.
But I think it's sadly it's lost its edge, but it's a beautiful city.
Mm-hmm.
These things tend to go in cycles, is our view. I mean, we're in the real estate industry. We do property exchanges, in this new digital asset world. So what we see is, yes, I mean, there's been a correction already, but you could argue it's already happened because of what's called real and nominal value of properties. So they might go up on paper, but they haven't gone up as much as inflation. So in actual fact, the readjustment in London property, you could argue, has already happened. You have guys like Lloyd's Bank, who's taken $2 billion worth of property in the UK at the moment and put it on their balance sheet, and they want to turn that into rental income. So they're looking to sweat the asset on their balance sheets. You have BlackRock, Vanguard, and State Street in the States, which is expected to own 60% of all private residential property within the next year. Okay, and what they're doing is they're turning it into the new form of money.
Did you say 60%?
60, yeah.
Wow.
They're doing it through a series of hidden LLPs and different structures, but that's where they're currently on track to do. Okay, and when you hear about generation rent, it's not so much of a conspiracy theory as many of us would like to first think. They're actually at it right now.
And it's not only that, sorry to interrupt you, Anthony, there's a lot of people buying farmland across the whole US, and it started as well in UK. Massive,
Massive.
Bill Gates, BlackRock, they're buying a lot of land.
So if we go back to thematics and themes that are now occurring in the marketplace, we have a long view. We've been at this game since 2016, 17. We had access to central bank data in 17. We did a lot of modeling around that. We anticipated a long down cycle, high inflation, too much debt, fiscal monetary policies no longer being effective, which is a perfect time, dare I say it, to do digital economy, because it changes the rules. It means you rebase in a different version of money that's not controlled directly by the banks, which has been the long-term hope and aspiration of many of us in the digital asset industry, where we end up with a better form of money than the one we're currently being offered. And we're on that path right now. God knows exactly how fast it'll happen, but it's happening. Where we're going to end up is we think that digital asset economy, where asset is the key thing, and stressing on the theme is the greater your ownership of fundamental title of real estate, not an entitlement, because most of us, when we get something through a custodian, we think we own it. Well, you don't really. It's just an IOU from the custodian. You deposit some money in the bank, you look at your bank balance, you think that's your money. No, it's an IOU from the bank. The bank owes you the money, and so on and so forth. You got some shares in a custodian. They say, Yahoo, I own those shares. Yeah, again, it's an IOU. It's pooled assets. So it all comes down to this: is, when things are a little stressed, the closer you get to the productive asset that generates a yield or revenue, and the greater your ownership of the title of it, rather the entitlement, rather than the IOU of it, that is a very interesting place to be in the current economic cycle. And that's what we've been focusing on as an exchange group.
And I guess that's where the crypto connection comes back in. And if I understand what you're describing correctly, it's kind of like tokenizing real estate.
Tokenizing title by stress, because that's where it gets very interesting, because entitlement can be taken away from you. If you look at a Coinbase terms and conditions, if you're BlackRock, they pay you whatever BlackRock owns within a couple of hours. If you're anybody else on Coinbase, they give you a promise to pay, and if push comes to shove, it's open-ended. They own it. They owe it to you in perpetuity, but they never give it to you. So if you think you own BTC and Coinbase, you might not really. The other aspect is a lot of those custodians only have insurance cover for about 12 to 15% of the assets they hold, as I'm sure Gary will know well from his insurance stuff. And that indeed is a problem. Not a problem when everything's moving well, but potentially a problem when push comes to shove and a BlackRock owns the liquidation preferences or the preferences, and they get paid off first, and there's not much left for everybody else. So it is the bigger battalions that ultimately have more leverage on these organizations as custodians, and they get looked after better than the rest of us. So these are all things to look out for when you chart the waters of the digital asset economy. And my view has always been, without giving advice, is stay close to the title.
The other thing is I'll throw in as well, some people in the real estate business have suggested to me that the real estate business is counter-cyclic to the economy. And so basically that they were arguing that they tend to do more building when we're in recession, because when a country's in recession or whatever, the cost of building something is lower. The cost of product, cost of materials, of people and everything. And so the indicator I've always used, which is quite a bizarre one, is how many cranes can you see on the horizon? Because if you can see a lot of cranes on the horizon, that means there's a lot of development going on, which means you're probably in a recession in some way. So I don't want to alarm people, because I work in the City of London in a fairly high building, and I look around me, and I think last count I could see over 50 cranes, which is not necessarily a good thing. So, but I'll throw it out. So other thoughts, or the crypto perspective? Ray, you've been sitting quietly. Looks like you've been making lots of notes.
Today it's just absorb as a sponge.
Yeah. And as I think I was saying last week as well, these kind of sessions, you end up drifting all over the place, and you go down some interesting rabbit holes at times, I think, as well. So that's good. Richard, from your perspective then, because you came on board specifically around the whole payment space of like in international payments and that kind of thing. Is there anything in particular you'd like to ask, or you're curious about?
I mean, the problem's a relatively simple one, but it's I was just trying to figure out a way to help this business. It's basically a pharmaceutical business that manufactures locally in Lagos, Nigeria, and their import-export is managed by a company in the UK. So they're sourcing all the raw ingredients, shipping them to Nigeria. The Nigerian companies are making products, selling them in the local market, and then sending the money back to the UK business. But for whatever reason, the UK business has been finding that its accounts are being closed. So they've been trying to open them up with other people, and it's just, as soon as you go to someone and say, oh, I'm dealing with a Nigerian company, even though it's a 100% legitimate company, it's audited by Ernst & Young in Nigeria every year, UK company pays all its taxes. There's nothing, unusual about this kind of business. I mean, there must be so many other companies like it. But actually going to open a bank account is really tough. And, you find your banking facilities can just be withdrawn at any moment. So you sort of kind of trying to open up a spare account whilst having one, just to kind of stay ahead of it all. And it's, and you don't get any information. So there's, you're not told why they're doing it. You don't know what you could do to put it right. So I was thinking, well, I wonder if one could get the Nigerian company to, essentially pay in USDT, and then UK company gets paid in the UK out of an exchange, essentially. Or
I think in all probability that the technology and concept of that is fine. I think you're actually digging yourself into an even bigger problem.
Yeah, I think probably.
Because I've seen similar. If you want to have some real entertainment sometime, go and speak to a bank about opening a bank account on behalf of a client who deals in Russian fine arts traded through crypto. And I've been there. I've done it, and it's generally a pretty short conversation, because you're combining all sorts of risky things. But you do tend to find that banks, certainly in the UK, are crypto averse, full stop. So if you think you're going to have a problem because of particular countries you're dealing with, you're just going to compound it by trying to use crypto at the moment.
I'm pretty certain if it was 100 million turnover business or a billion turnover business, then getting the right banking facilities wouldn't be a problem. I think the main problem is just not being the right size of organization. So actually, they can't talk to anyone that can actually reason.
Here's a perspective, though. 6 months ago, we were dealing with a top 3 bank in America. We were in discussions with them to issue a self-custody digital asset wallet to every one of their 68 million customers in the USA.
Wow.
Okay.
That'd be amazing.
Now, the problem was their C-suite didn't really understand how to spell DLT. And it was a Dilbert moment. It really was. What color do you want your stable coins, I think. What actually happened, and we got them to admit it in the meetings. I can't name who they are. But what we got them to admit in the meetings is that up until about the Genius Act and Clarity Act in the US, so just about January last year, they freely admitted to us on a call that they thought they were fully protected behind the SEC and the Federal Reserve, and they had closed down their blockchain teams 2 years previously because choke point 1, choke point 2, as many of us know in the industry, and people being debanked for touching stable coins, that was de rigueur, that was standard. And so therefore, they never thought that they had to embrace with the new technologies because they thought they had created a high enough wall to protect them from it. Trump gets elected, Genius Act comes in, Clarity Act comes in, and the walls get knocked down. And then all of a sudden, they find they have to compete with everybody. The end result of this one is it's highly likely that any bank in America that wishes to maintain its banking services to a broad base of customers will have to adopt its own stable coin, or join up with others to adopt a stablecoin with them, or otherwise they are outside of the business, because the efficiencies of the stablecoins moving around the world are so exponential relative to current value and costs of a legacy money moving around the world, is that the legacy banks can't compete. And that's the simple truth. And they've accepted that privately. So right now there's a flurry of people going to the Office of the Comptroller of the Currency, OCC, getting their licenses that allow them to issue stablecoins under their own name.
So having probably worked for the 3 banks that you won't name,
yeah,
the color from the inside would be that banks have army of lawyers, and they have army of lawyers for 2 reasons: to do documentation around deals, but primarily to protect themselves, because they're always in court somewhere in the world every week of the year, because the nature of doing business. But more importantly, the nature of bankers, they see the money and they grab it, and then it goes wrong. In terms of digital, most of the top banks have appalling technology, woeful, And you were talking about opening up bank accounts, and you mentioned African client, crypto, etc., small business, small balance sheet. Anti-money laundering checks really have been manual for many, many years, if not decades. So with the advent of technology, things start to speed up. But the banks are so far behind on budgetary spend for technological improvements. That's a massive step for them as well. Add into the fact that they're ignorant, they will hunker down and protect themselves. And then they go and talk amongst themselves. So the greatest thing actually was Trump and the things like the Genius Act. Banging the SEC and the CFTC's head together would also change the market. But it's the fear of technology, because technology destroys the boundaries of the markets that they control. Now you're saying, hey, it's pretty much a free-for-all. We can go anywhere, anytime, do multi-asset transfers, maybe do an FX conversion back into fiat. The banks are going, hang on a second, I can't go anywhere at any time with any asset, because I can't have my risk profile examined by the OCC or the SEC or the CFTC that fast. And that's why they're in desperate stakes, really.
Well, here's the thing, the elephant in the room. Is that in the geopolitics of all of this, if you've got Tether moving trillions around the world and accessible to it, and the market designing that they want to have better, faster, easier money, and then the Europeans turn around and say, some of the rules is hard to set up with MiCA and try to they have for the moment kicked Tether out of Europe, and Tether more or less laughed in their face and said, you can kick us out of Europe for now, but you cannot, if you want to grow your economies, ignore the liquidity that we can bring to your economies. So we ultimately
market forces will turn against them.
Exactly. The liquidity always wins.
Yes.
The market liquidity always wins. And they can go without it for a while. They can protect their legacy banks for a while. But ultimately, under the tsunami of liquidity that otherwise they're missing out on, they ultimately have to adopt. So it's not a question of if, it's just a question of when and how fast. And the winners were the ones that adopt most quickly.
And I'm sure the banks recognize that they're losing out on liquidity. But in the UK, to open up a bank, just to make an application, you should be planning for 1 year of documentation and then going to present to the regulator. If they don't see what they like, they'll kick you back and say, come back in another year and present again. So that's a 2-year horizon.
Speak to Revolut on that one.
Yeah, exactly.
Yeah.
Now you're asking banks, which are huge aircraft carriers, to be nippy like digital coins and turn around on a dime, to coin a phrase, and be really speedy and inventive. And that's totally uncharacteristic of banks.
No, but it's like the Skype and the BT moment. BT was having its revenues eaten for breakfast because they moved to a new version of voice over IP. BT was stuck with the copper cables and all the regulations that they had to work under. Mm-hmm. And you're quite right. They couldn't turn the beast around in time. And BT exists, but it's nothing like the beast it was.
And then on the flip side of that, internally, the senior execs are thinking, I've got another 5 years, another 5 bonuses. I don't want to rock the political boat. Yeah. So they stay hunkered down. That's why they go and talk to each other. But we also know that at the same time, some of the smart banks have had teams working on this for quite a few years now.
Here is what Japan is doing. I don't know if you guys saw this week. Super interesting. So
come on in on this one. I'd love to hear what you have to say.
Yeah, look, the Japan. You're gonna like this, by the way. I know you, so I know you're gonna like this. So the Japan's Financial Service Authority, equivalent to the FCA in UK, launched the Payment Innovation Project, and this is to support a joint initiative by the major banks and corporations in Japan to issue yen-denominated stablecoins. So this is massive, absolutely massive. You understand very well why, because for Japan, just look about what is the Japan's debt to GDP ratio. Yeah, 230 to 250%. You know, that's absolutely crazy. So, of course, then that means one simple thing, okay? The weakness of the Japanese yen over time has been happening for a long time. How stable coins can help? I mean, it's just think about all of those. Basically, they will be backed by reserves like yen deposits, yeah, Japanese government bonds and JGBs, yeah. So this is a sort of a tool to combat the actual yen prolonged depreciation, yeah. So this will enable the major banks, Mitsubishi, you know, and Sumitomo, all of those big banks, to issue these stablecoin assets, and of course, then at the same time, Japan modernize also their financial infrastructure. You guys were talking about financial infrastructure, how bad it is in the banks. Japan is better than many, but it's still bad, yeah. But of course, this will boost not only the domestic but the international yen usage, and of course that will over time start to strengthen the currency's global standing. So I mean, it's massive what they are doing in Japan, I think, you know.
Well, to play the opposite of that coin, literally, what happens if you don't have a stable coin and no one's using the underlying currency that your stable coin is supposed to represent? Now, this is what we've held to the Treasury and to the UK government. Is that if you don't have one and no one's using your money, what is the value of your currency in the future if no one's using your money?
So with UK, the problem is that if you're not adapting to all of these, I mean, you've seen what happens in the US. Peter is constantly buying bonds, right? Not just that, but all the stuff that is related to the US government, that they are there, you know. So the thousands of stable coins that are going to appear in the US are going to help a lot with that, yes.
Well, it doesn't make the debt go away, but it certainly makes an impact on it.
Yes,
still
well,
there. Yeah.
Of course, the debt is still there, but there's a mechanism. I'll send you. I'm just about to finish a Substack. You're absolutely gonna love. I gave some tips last week. Okay, we had this discussion here. But problem is, if the UK doesn't adapt, and I think you're gonna relate to this, you know, there are the debt ratio and all the things happening around when everybody's adapting to the new world of finance means the UK is very vulnerable, you know. Investor flight, you know, investors going away is happening already. Then, of course, being policy blind, then you don't have an expansion on your fiscal policy with this new world. So the debt continues to balloon. You know, there is so many things that are happening in the UK that actually Japan, when they look and say, we are having these problems, you know, and I think we can tackle in a different way. Because if it attracts all of this foreign money that are, you know, buying your bonds or gilts in the UK, yeah, for example, then it helps a lot, you know. It strengthens your currency again. And I think the UK is missing a big trick on this at the moment.
Well, we've been telling the Treasury this for 3 years, but so far they're not listening.
I know you have. That's why I think you're going to like this, you know. So Japan is spot on what they are doing, you know.
So come back to Richard's point initially then. I think that the immediate answers are crypto is probably the wrong solution at the moment, but might be an option in a few years' time, depending upon how things go. And the other thing is, sadly, it sounds like you may need to go down the route that I certainly encountered on the crypto side of things with trying to help companies facilitate payments, is that you end up creating multiple accounts across multiple countries that, bizarrely enough, make what you're trying to do look like you're money laundering, even though what you're trying to do is be completely legal. And it's quite profound. You know, you end up setting up an account in Lithuania, Amsterdam, and Estonia, and moving the funds around. in order to be legal. And yet when you look at it written out on a piece of paper, you go, that has got to be dubious. So it's very sad. So maybe the banks and the regulators in the UK might have a eureka moment at some point and realize actually by facilitating ways of doing things, it actually helps them to control things in a better way and enables things rather than prevents things.
Well, yeah, my local MP's been quite good at, forwarding letters, so I might have a go at that and see what they're all thinking, if they're thinking anything beyond the current budget. But yeah, and I'm an e-citizen of Estonia, so maybe it's about time we open some facilities over there.
Yeah. There is some movement though, because Treasury is desperate for taxation.
Yes.
And the problem is as the points are raised here in this call, their ability to do the fiscal policy stuff when you have an ever decreasing tax base is definitely hurting them. And just a marker here, when they say they're going to tax the wealthy, those with the broadest shoulders, well, a lot of the broadest shoulders are already left, and what they're effectively meaning, anybody with a heartbeat and a bank account is who they're going for next. Okay, we're all wealthy. Congratulations, I'm the first to tell you. Okay, so that's basically where we really are. Now, the problem is in this new economy, their tools, and going back to the previous point, the tools aren't there yet. So, we're showing the Treasury at the moment the way that they can collect taxation on a global basis for the use of the nation state's assets in an asset-based economy. And we think we can shift the UK taxation by about 36 billion pounds sterling over the next 3 to 5 years. In terms of tax receipts, we think we can shift GDP by 1.2 to 1.8% just by effectively tokenizing real estate in a state-sponsored, state-supported, land registry compliant, FCA compliant, Bank of England compliant way. But we're still in an information war where we're trying to get people to understand this, because their first response is you're something to do with crypto, and they don't understand, and therefore our political leaders aren't terribly numerate. They're not particularly tech savvy, so we constantly have this uphill battle of trying to educate. We decided ultimately, and it goes back to a previous point raised here, it's easier not to tell them. It's easier just to show them. Because as soon as you can show tax receipts arriving at an the HMRC account, then that's all they're really interested in. And they'll protect that and they'll support that, because that's all they can really understand at a point of exigent requirement when they need it most.
So, Anthony, do I blame you when I get a tax bill from HMRC here in the US?
I'll be able to reduce your stamp duty by a considerable margin.
Oh, thank you. That's something.
It's micro stamp duty, and we get everybody overseas who's using real estate as money itself in the global economy. That's what drives the tax revenues. Thankfully, not our long-suffering middle classes.
Just talking back to Fareed's introduction, what are everybody's trading tips at the moment? What's going on out there? Because watching Bitcoin sort of fluctuating quite substantially, but mainly in a downward direction. I'm wondering what that's doing to the treasury function of DJT stock at the moment. But I'd be really interested to know what you're trading in, Fareed, and what everybody's kind of setting up.
I'll open it up on something that I've long extolled this as an approach. And again, this is not financial, legal, or taxation advice, blah, blah, blah. Is that, first of all, I think you should only ever listen to financial advice from people who've got 3 things that they've achieved through crypto already, okay? If they own a Caribbean island as a result of the crypto activities, and they own a helicopter, and they own a yacht that the helicopter can go on, then they're worth listening to. Anybody else has probably, if they've done well in crypto, is probably through good fortune or manipulation or both in some way.
I think what Gary just described in that last one is, and if they sing like a whale.
I don't know I think what you described in that last one is a financier that committed suicide, but
I can give you one more tip.
yeah.
It's quite interesting. Something that I saw this week as well. Belarus had they activated the second unit on their nuclear power plants. Yeah, it was like end of 2023, and they just basically the president gave instructions for using all the surplus power that they have for mining Bitcoin. So nation states are instructing, and they're not the only one, by the way, instructing when they have surplus energy or they are also giving incentives to anyone coming to do the mining of Bitcoin in the country. So Chinese are going there, Russians and so on, because they are subsidized electricity costs, because it's surplus, so they can actually decide whatever they want. And because country like that is not the only country, but a country like that can do that quite easily, but other countries can still do this subsidy, and they do at the moment.
Well, the argument is if the Bitcoin mining fails, they've just built the country an AI data center.
Yeah, of course. It's about energy, right? As long as you have cheap energy, you can attract a lot of people. So they can very quickly to change to AI if they wish. So I don't see that.
Well, that's probably again, it's a meta level type thing in terms of stuff that's going on. In the UK, I'm seeing massive number of planning applications for data centers, and I'm seeing a lot of government support as well. So the UK government's industrial strategy 4.0, I think it is, includes mention that they will actively support data center development, which is quite scary, because meanwhile in the US I'm seeing some companies beginning to consolidate their data center operations. And in the UK, there are companies who are doing speculative data center applications all over the place, even though there's not the power or the water to support them.
Yeah, exactly. No power.
So I think the data center space is probably the next big fad that is going to shrink in the UK. So I get involved in some planning things in the UK sometimes with councils and that.
Yeah, but unless the cost, the power equation, the cost of power changes or becomes decentralized in a meaningful way, I can't see how the data center, except for a strategic aspect, can possibly really work in the UK. They don't have the cost of, same as with the mining. The best miners always go to the cheapest power.
And the other thing as well, particularly in the UK, it's not just about the power, it's actually about the water. Because quite often local authorities think of it in terms of, the data center is going to consume loads of power. So to the west of London, for those who don't know the geography, there's a place called Slough. And Slough, as well as appearing in Ricky Gervais's Office comedy series, is also the home of some of the largest data centers in the UK now. And I think data centers are consuming something like 46% of all the power in that area now, which is beginning to give them problems because they can't support it. But what's about to get even worse is when they realise that they're not going to have the water to keep everything cool anymore. So we see that
the grid infrastructure isn't there to support the plants in their current locations.
Yeah.
We've been talking to companies and some very, very large names, and they're building data centers all over the world. Apart from acquiring land to do it, it's the infrastructure build to bring in. So you start with roads, obviously, but the issue around power and particularly water is significant, really is. And we're talking about, some of the biggest companies in the world are definitely forging ahead with this because they're seeing the power of the computer as their bread and butter. And so they will make it happen, but all their headaches revolve around power and water, outside of legislation and government, planning, etc. Could I ask one quick question of Anthony? I've known Anthony now for quite a while. Anthony, you keep fascinating me about this tokenization of real estate. Are you only talking about freehold property, or does it encompass any type of, or can it encompass any type?
Any type.
Leaseholds as well.
Here's a little bit of the background on again, trying to stay thematic on this rather than party political content sort of thing. So anything that doesn't move, and so infrastructure, airports, roads, bridges, commercial buildings, public good, private, anything that doesn't move, land, arable. Right. The issue that we always saw is this one. This is the thing that everyone probably think about after I finish here. Is we've ultimately defined in a long-term economic view of this one that the only thing that robots and AI cannot make is real estate. And so therefore, if you want to have, they can make everything else in one form or another. And therefore, the only way that you can truly create a stable economy or a stable form of money in that economy is making sure that you can use your real estate in a clear, transparent, well-governed way as your money itself. So returning real estate and its value in a public open marketplace into a form of recognized money anywhere in the world at any time. And we think that is ultimately the best way to protect the value of our money that we earn and our wealth that we earn in it from our governments inflating it away. And so we think real estate is the only answer to the problem.
Right.
Hopefully that answers your question, but it's all real estate. But it takes a while. We're launching 20 exchanges. We just closed a 47 million round here in London. Happy to report last week. That allows us to launch the first exchanges. It's an ecosystem approach, so it's a system solution rather than a point solution. So it'll take a little while to spin them all up to speed, but in 2 years, we think there's about 20 exchanges launched or launching around the world, and allow those properties in those regions that we have in exchange to deploy onto those, and those will be commercial properties too.
Congratulations. It's money in the bank already?
No, the buggers.
when money is in the bank,
we got the public.
You can
commitment.
smile.
Yeah, we got the public commitment, and they'll be hard pressed not to deliver what they say. It's actually been slowed down by the U.S. government shutdown. Not to go into the infinite details, but it stopped the IRS from processing the transfer across the U.S. So we're sitting here with bated breath, waiting for everything to unlock fully in Washington.
And great, money in the bank.
Great news there.
Money in the bank talks.
Yeah. Well, then we can start moving at speed, which is what we've always designed ourselves to do. But we had to keep it all a bit quiet until we were ready.
Yeah, I get it. I was making a joke.
Okay, talking of quiet, we've only got a couple of minutes left, and I try to finish these on the hour. So I just wanted to check if anyone's got any urgent, pressing things they just want to ask or share or anything.
I want to know whether Bitcoin's going to go up next week or not.
Yes, it is, or it isn't, definitely. I think I can confidently predict it's either going to go up, down, or stay the same.
But we're looking at a Bitcoin trend rate.
Up. I don't think it's going to go up.
I'd like to caveat as well. You remember my point before about the 3 things that you have to have before you should believe people?
Yeah.
Because I don't own any of those, then that means straight away you should discount my belief that you should only have those 3 things.
Well, I'm still listening for those whale songs out there. I haven't heard them yet.
Yeah.
It's gonna go up. I mean,
JT's usually pretty good at this stuff, but
government shutdown is gonna end pretty much. So open the government means everything is gonna come back. I don't see any other way. It gives more confidence to the market. Probably interest rates are going to be cut again, so people are talking about that. I think it's going to be a pullback. These are all liquidation games. I mean, they make billions. Do you know if Bitcoin reaches 112K, there's about almost $5 billion dollars in liquidations to be taken. So the bots are going to do all of these liquidations again. It's just a game for them now.
There we have some thoughts and some opinions, which I'll probably wrap up before we start getting to too much into actually making financial predictions.
Yeah, no financial advice. Okay.
Yeah, and then I get banned, which would not be great. Folks, I'll close it off there. Say thanks very much. Really interesting conversation. Hope everyone's enjoyed that, found it interesting, worth joining. Thanks as always to those who've contributed. And even to those who've just come along and listened. Do come along and speak a bit more next time. But yeah, hope you've all enjoyed that. Thanks for joining. Speak to you all again sometime. Bye for now.
Thank you.
Gary,
Bye-bye.
always a pleasure.
Thanks
Thanks.
very
Bye.
much. Fascinating.